What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is December the 4th, 2023. It's day number 38. We made some trades today, so let's get into it. So let's talk about the key levels first. Today's key level was yesterday's closing price, which was Friday's closing price, which was 36,307. So let's go ahead and talk about today's trades. Now, at trade one, I went long right here at higher low A as prices came back to retest it, went long during the uptrend in expectation that yesterday's closing price would get hit. But I exited when I saw the lower high get formed at B. And that's usually how it goes when you're trading a higher low. If you ever trade a higher low that comes near the top of an upswing, after you've already had a very extended move, the probability of that higher low actually being successful decreases. But the reason I still took this trade right here was because I saw that yesterday's closing price was not too far away. We had strong momentum coming up into that level. So before this even happened, I was like, look, if we get a higher low anywhere close to yesterday's closing price, I'm going long if it comes back to retest that level. So that's exactly what I did right here at trade one. But you also got to respect price action whenever you see it. Now, right here, we had a lower high get formed at B. So anytime I'm long with a higher low setup that I'm using, if I see a lower high, no matter what the circumstances might be, I got to get out of my long trade. So that's exactly what I did right here as prices came back to break past that level of support from that higher low. So I made a good decision right there, because if I held that trade, that would have definitely ended up in a pretty big loss. So let's move on to trade number two. Now, trade number two came down here about maybe 30 minutes later. So prices found support at the high volume candle at C. So this is the high volume candle. And this is really what I wanted to talk about a little bit, because in one of my previous videos, I think it was called a deeper discussion on the importance of volume or high volume candles. And I talked about how whenever you have a big high volume candle like we had right here at 9:30 when the market opened, the next candle that follows that will be very significant. So you can more than likely, if it's an uptrend, you can use the lows for that candle that came second as a level of support that should kind of hold up in some way, shape, or form. So that's pretty much what we saw as prices came back down to retest this level right here. They bounced off of that level from C, created a higher low at C1. And then as prices came back to retest C1, that's where I went long from at trade number two. And then I just took it back up to a major level of resistance that used to be support from earlier in the pre-market. And I just took it back up to that level, and I called it a day after that. Well, not called it a day, but I called it a trade. So let's go ahead and talk about trades 3 and trades 4, because this is very interesting right here, because trades 3 and 4 come down here. Now right here, I was just reading the market wrong, because as you can see, we did trade in a zone between this higher low and then this higher low below. All right. So that was pretty much the zone that we were trading in. And then the zone kind of expanded up to this blue line that we were talking about that was support from trade number C. Well, letter number C. So at 3 and 4, I went short based on the higher low getting broken from higher low D, because that's usually what I look for. Saw a strong downtrend. We're breaking past major levels of support. We formed a higher low. We broke past it, came back to retest it. So I'm shorting right here, expecting for the selling to continue at least back down to the opening price for this candle, which I believe was 36,114. So that was the idea and the concept that I had at 3 and 4. But I didn't realize that we were trading in the zone. You know, I didn't really draw this level for the zone on the bottom until after all of these trades were done with. Well, after trades 3 and 4 were done with. And what I realized is that I was shorting from the middle of the zone. And when it comes to trading the zone, that's something I don't want to do. So in order to avoid this, it just means that I need to analyze the market the correct way and pay attention to all of the details in the market. Because this candle down here did represent a higher low. And I saw this candle and I thought that it was a higher low, but I said, it's just not significant enough. So I'm not even going to mark that up. But it ended up being very significant and acted as the low for the zone's bottom. So that just goes back to just a simple concept, which is, you know, study the chart the right way. I know exactly what I need to look for when I'm looking for the higher low break. I know exactly what I need to look for when I'm looking for the consolidation range to play that range. So I don't need to really get those two confused. Just come in, look at what you see. Don't ignore anything. Don't think that any level isn't significant enough for you to actually trade off of it. If you feel like it's important, No matter whether or not you're sure about it or not, just mark it up. And if it's not important, you can always come back and delete those lines later. But always make sure you pay attention to everything in the market that's in front of you, and you'll avoid situations like 3 and 4. So we come back to letter number E. Now this is when things start to get a little bit interesting, because we come back up to this level, we form a double top, and then we push back into the zone. So at trade 5, I shorted right here as prices made the double top, came back into the zone, and I expected for prices to come all the way back down to the bottom. But in this one specific scenario, they really just didn't do it. You know, I was trying to figure out why exactly that happened. I couldn't really come up with a reason until I looked at trade number 6, because trade number 6 had a little bit more confirmation than trade number 5. They were both the same setup from the same exact levels, but the only difference was this lower high that got established right here at F. This lower high just gave me more confirmation that I needed to actually see prices continue to the downside, because right here we did make a double top at E, but that was only one signal that told me that I needed to go short. But in this scenario, we had two signals. We had the double top up here at E, followed by the lower high at F that eventually pushed prices back down into the zone. And that's when I took the short trade at trade number 6. So I shorted right here, and then I added a little bit to my position as prices came close to my take profit at trade 7. And then I closed out the entire position once we got back down to the lows of the range. So when it comes to trading the zone, that's pretty much exactly what I'm looking for. And notice how when I traded the zone from the extremes, which in this case was the top of the zone, I was successful. But notice how when I traded the zone from the middle, I was very unsuccessful. And that's always how it's been. That's always how it's really been for me, because I don't know what it is about a zone, but when you trade it from the middle, you just open yourself up to so much risk that's just unnecessary. So I've learned the hard way that it's better to just trade it from the extremes. If you want to short the zone, you short from the top. If you want to buy the zone, you buy it from the bottom, and that's it. Those are really the only two things that I should be looking to do. And trades 3, 4, 5, 6, and 7 are all a good lesson that reminds me of why that's so important. So that right there, that was the morning session. That was part number 1. I kept trading a little bit throughout the day. So let's go ahead and talk about part number 2. All right, so let's get into trade number 8 right here. So at 8, trade 8 was right here based off of higher low G. So I went long here as prices retested the higher low at G, but this trade came back to break even. And that's really what is going to happen for trades 8, 9, and 10, because one thing about being in a bull channel like we were today is that a bull channel represents an uptrend, but it just represents an uptrend that's not all that strong. Like if you compare a bull channel to some of the other higher lows that we've been looking at over the past few weeks, those higher lows have been a lot stronger, and it's been more of a vertical move and then a pullback and then another vertical move compared to a diagonal type of move like we're seeing today. Like if you wanted to, you could really slap a trend line on this uptrend, start it from here, connect it through this point, and then just extend it, and it will touch almost all of these higher lows that were established. So whenever you're in a bull channel, just remember that the trend is good, but the trend just isn't all that strong. So got stopped out for break even on trade number 8. So let's talk about 9. Like I said before, 9 was also a break even trade. I went long here based off of the support level from higher low H being respected. Once that got respected, I went long, came back to break even now. Same thing on trade number 10 right here. I went long as prices came back to retest H once again, and this was the 3rd break even in a row. So that's when I started to realize, okay, I'm leaving too many points on the table, because one break even, that's not that bad. That happens all the time. Now 2 of them back to back, that raises a few flags like, hey, something is going on here. But then the 3rd one in a row, that just lets me know that, okay, the uptrend is not as strong as I thought it was. So I need to adapt, and I need to adapt right now if I want to make some types of profit. So I came back on trade 10A, and I went long as prices came back to retest the higher low support level at higher low I. And then on this trade, I just decided to go ahead and get out at the top of structure right here at J, because these past 3 trades, they should have been successful. And I was getting a little bit frustrated because I see where the trend is going. I see that the trend is up. I'm participating. I'm getting into the trend at the right levels from the right prices and doing the right thing. But my trades are still coming back to break even. So I said, okay, if that happened 3 times in a row, more than likely it's probably going to happen 4 times in a row. So let me just take profit. Now, if I would have held this trade, it would have been able to go ahead and hit my normal target, but that's just hindsight bias. Based on what I was able to see up until that point in time, I feel like I definitely made the best decision I could at 10A. And I was happy because I finally locked in some profits and was able to make back some of those losses that we took on part one, and almost got myself back to a profitable territory on this trade, but not quite yet. So then we have, let's see, what's the next trade? Okay, so trades 11, 12, and 13 are the next ones I want to discuss. So 11 through 13, I went long at the retest of higher low K, but I should have been buying at the lows of the zone. And what I should remember is that I always need to buy low, no matter what the scenario might be. Because if you look at trade 11, 12, and 13, all three of these trades would have been successful if I would have bought from the right prices. But, you know, I was just being a little bit stubborn right here. For me to go long on trade 11 right here based on the retest of the higher low, that's a legit trade right there. I took a loss on it, but I'm willing to take that trade every time I see it. That's a loss I'm willing to accept. That's okay. But then on 12 and 13, that's just bad trading right there, because if I went long at higher prices before and it didn't work, it's no way I should go long at higher prices again from the same price at the same level about a couple of minutes later when nothing has really changed in the market, because more than likely, if you do the same things, you'll probably get the same results. And that's exactly what happened right here. Now, if I would have been buying at the lows of the zone like I should have been, trade 11 would have seen profit, but would have came back to break even. Now, I would have took trade 12 at this level right here. It would have came all the way back up. I would have been able to take profit somewhere up here near the top of the range. And then as prices came back, I would have had a choice about whether or not I wanted to go long right here towards the bottom of the range one more time. So that's why it's so important to make the right decisions initially, because you never know how those losses that you take now will affect you in the future from a mental perspective. Because this right here, these three trades, these were all mental. I was in my head on these last two trades because I just felt like the bottom of the range should be holding up. And I was just so hell bent on the bottom of the range being these two candles, rather than just acknowledging the fact that the bottom of the range could be this swing low or it could be this swing low. So you got to keep all of those options open. You know, anything can happen. So you don't just want to single out one specific scenario and say, this is what's going to happen and this is how I'm going to trade it. I don't care what the market tells me. This is what I'm doing. You always got to be flexible, be willing to adapt, and be willing to understand what the market is telling you, and then just go with the flow. So that's really the biggest thing I learned right here at 11 and 13. So I come back on trades 14 and then trades 15 right here. Now, if we read the notes, it says at 14, this long trade was profitable, but it wasn't based on a higher low, and I shouldn't have taken this trade or trade 15. Now, even though they were profitable, they were really good trades. They got me back into profitable territory and pretty much gave me a very good profitable day, but that's just not something I should be doing, because this was also a revenge trade. These last four trades that I took, 12, 13, 14, and 15, were all revenge trades because I just felt like I had to make this zone work the way I wanted it to work instead of letting it work the way the market wanted it to work. You know, I can't control the market, so I can't just say this is how it's going to go. The market tells me where it wants to go, and then I just follow suit. The more that I try and fight against the market, the more it goes against me. But trades 14 and 15 are a great example of how you can still fight the market, and sometimes you just might be right. But that doesn't mean that you made the right decision. If you didn't stick to your trading plan, then hey, you got to clean that up, come back the next day, and work on doing the right things. So that's pretty much my plan that I have for tonight. I need to get on the simulator and just go back to a session, take some trades, and focus on making the right decisions no matter what the scenario might be. Because what I've learned is that as a human, it's going to be very hard for you to trade without emotion. It's just a part of being human, you know? That's something you got to deal with. So what I've learned is that you will get emotional sometimes when it comes to trading, but you just got to sit down with those emotions, accept those emotions for what they are, accept that feeling like, oh, okay, I feel irritated because I went long, but not where I was supposed to, and then it got stopped out, and then I saw prices go back to where I initially thought it was going to. And then you sit there and you say, okay, I don't like how this feels, but it's something I can do to change this. And that something is getting in from the right levels at the right prices and following my plan. So that's what it's really all about. You know, you got to figure out how to control those emotions, how to accept those emotions, and still be able to make the right decisions. Your emotions are going to be your emotions. Don't let those, you know, stray you off of the path and lead you down the wrong road. Make sure you stick on the right road, stick to the right path, and do the right things no matter how you feel, no matter what the scenario is. You got a plan, you stick to it, and you follow it no matter what. And that's the biggest lesson that I learned for today. So I feel I feel very lucky. You know, I made some good trades today. I did some good things, but I also did some things that I know I shouldn't have. And that's really what's sticking in my mind the most, because today is a profitable day. But I've had profitable days before where I've done the wrong things. And I kind of tried to sweep it under the rug like, oh, yeah, you know, I did the wrong thing, but I'm going to come back tomorrow and get it right. And then I come back tomorrow and I have a terrible day because I'm still in that mindset that, oh, you know, it's okay to go against my trading plan because sometimes it might work. No, no, no. That's not the mindset I'm going to fall into this time. Not at all. I'm going to make sure I get these trades right and come back tomorrow and do what I'm supposed to. So I appreciate you guys for tuning in with me today. It's been a good day so far. I felt like I definitely learned a lot, and I hope you guys did too. I'll be back tomorrow on December 5th, ready to run it back one more time. But until then, you guys, have a good one, study hard, and take it easy.